The European Central Bank raised interest rates across the Eurozone yesterday for the first time in 11 years in a bid to tackle inflation. Eurozone rates rose from minus 0.5 to 0. I kid you not. But there are more rises to come, and this move means the Bank of England is probably more likely to raise UK rates again in early August. Now, the Eurozone economy has been struggling in recent months, and there are fears higher borrowing costs could tip the region, which remains hugely important to UK trade, of course, into recession. Vladimir Putin's threatened to cut off gas to Germany. Italy's reeling after Prime Minister Mario Draghi resigned. And some are concerned the Eurozone could once again experience the kind of turbulence when Greece was almost forced out back in 2011-12. I'm still with my expert panel, Professor Patrick Minford. Let's talk to you. You used to advise Margaret Thatcher. You famously clashed with someone called Nigel Lawson back in the day about the European exchange rate mechanism. To be fair, you've been a very prominent Euro sceptic, but as an economist, as an analyst, as a forecaster, what are your thoughts on the Eurozone at the moment as they raise interest rates to the heady heights of 0?
Well, they're under the cosh, really, to raise interest rates because of inflation. And, of course, they're being heavily criticised inside the Eurozone by Germany for having allowed inflation to rise so sharply, because Germany's argued that they've had much too loose a monetary policy. And as you pointed out, they went to negative interest rates in the course of doing their loosening of money. So they are in a serious situation where they have to tighten money. And, of course, the big dilemma for them is that as they tighten money, they make countries like Italy look more and more dicey, pushing them into potential recession and pushing up their rates that they've got to pay on their debt. So that's threatening, the same sort of crisis that they had with Greece. And they're talking about some way of kind of buying more Italian debt to kind of keep the rates on the Italian debt down, stop the so-called spreads, against Germany and so forth. But the trouble about that is that they're not, again, Germany opposes this because they say you can't do that. You can't give a special deal to one of the countries in your borrowings and the buying you do of their bonds, when they're not necessarily obeying the rules. So there's a lot of controversy about this, and I think there's a crisis brewing of quite substantial size, and it may well be that, the euro is going to come under a lot of strain.
Catherine McBride is still with us, of the Centre for Brexit Policy. You're also, a well-known Eurosceptic, but none of us really want the Eurozone to go back into turmoil, do we, the way it did in 2011, 2012, because this is a huge area, hundreds of millions of people, a massive collective economy, a big part of our trade, of course. It would really hammer the UK if that happened, right?
It would hammer the world, actually, because the euro has become a major trading currency. But the real problem they have is they're importing inflation in US dollars because they import so much fuel, and especially Italy. So, in fact, this will help Italy survive because right now, if they let the euro sink more against the dollar, because we saw the dollar increase their rates by 1/4 point in June, and they're expected to raise it by another 3/4 of a point.
Higher interest rates push up the dollar, right?
Push up the dollar.
So the ECB has now raised rates, hopefully to push the euro back up.
Yes, exactly. Or at least keep it in line. They're not raising as much as the US because they understand that they can't do that. They don't want to, as Patrick said, squeeze people too hard. But at the same time, they can't go the way of Sri Lanka and Turkey, where their currencies have fallen so much against the US dollar, which is kind of good for exports, but tragic for imports. And if your imports are denominated in US dollars, like oil and gas, then it really hurts.
We've talked so much, haven't we, Catherine, over the weeks and months about the impact of exchange rates on inflation. If you raise your interest rates, it hopefully pushes up your currency, makes your imports relatively cheaper, particularly if you're importing lots of fuel, particularly in dollars. Just briefly to Patrick, while we've still got you, Professor Minford, I wanted to ask you something a bit more personal. You are a very high-profile economist. You've been a huge name in British policymaking for much of my adult life. I remember writing about you in my economics A-level. Crikey. But when you are cited, so many people, so many of our political and media establishment, if you like, rush to criticise you personally. Why do you think that is? And how do you feel about that? Because your forecasting record, it seems to me, has been pretty good.
Well, that's very kind of you, Liam. You know, I don't really pay any attention to it, to be quite honest. I write books and I write articles saying what I think, and I'm doing research on how the economy behaves. And as you know, we did research on the effects of Brexit through free trade agreements and so forth, and said that this would be very good for the British economy, as both you and Catherine know. So I just do the research, and I think the research we've done on how the economy works backs the sorts of policies, you know, of Brexit and Liz Truss's supply side program going forward. And, you know, we've discussed all that. And I think that, of course, the people who attack this are just really attacking. They're all part of this orthodoxy, as we saw with Brexit. They are part of the sort of orthodoxy that Britain's declining, and, you know, all we can do is kind of manage decline, and there's no point in trying to kind of cut taxes and leave the EU and try to get regulation down, all of which I totally reject. So I would expect them to attack me, and I'm really quite flattered that they do, because it shows that we might be getting somewhere.
It strikes me, Patrick, and I remember when in the early 80s, 364 economists famously wrote to the Times saying that Margaret Thatcher's policies, as advised by you, were wrong. But in the end, you turned out to be right, the historic record shows. Maybe they've just never forgiven you for that. What do you think?
Well, I don't know, honestly, Liam. I mean, all I know is that, you know, I know what I think is right, and I'm going to go on defending it. And I think that's, you know, why I think it's right is because I think it's for the good of the British economy. And I'm in favour of the British economy doing well, and I think it can. It's a great economy.
Well, Professor Patrick Minford, it's been good to have you on the show, joining us from Cardiff, where you are at the university there, having run the economics department for many years.